Hello traders, welcome to the daily market review. This is David. We're going to be looking at GBP NZD during London session. So let's get started. So on a 4-hour, basically what we look at, we find a peak formation low at the very bottom right here, and you can notice there's a divergence also. So that kind of confirmed that that's a peak formation low. Now, once you notice the price pushed up, that's basically indicating the first impulse. And the breakout happened right over here. And then the end of the trend happened right about there. And then the price retraced. And then it started to consolidate above the resistance level. So now it became the support, like all the technicals talk about. So once the price came down, it broke again at this high. So we're gonna draw another level, and let's zoom in. So what happens here? The price breaks above again, and then it starts to consolidate the whole time. So that kind of indicates that's the second phase. Started from here. So that's the first trend, and this is the second trend, the second wave. And then the final stage was right about here. And if you notice, basically, as you can see, the breakout took place right over here, and it impulsed through. So right now what we look at is basically a 3-wave pattern. Wave 1, wave 2, and then wave 3. So what is next? Currently, if you look at on a smaller time frame, we are at the peak formation high. How do we know that? Simply look at the price and look at the divergence. Look at the volume. The volume is indicating there's sellers in the market going lower and lower. And then it's the same thing with the price. It's going higher and higher. So each day it's going higher and higher. So today is Tuesday morning, London session. So right on Sunday, market opened up here. But last week it created a high, and it respected that high yesterday. But however, yesterday's high is being respected again today. So what we see here on a 1-hour time frame, we see a bearish let's see, that's a bearish hanging man, or you can call it inverted hammer. Okay, right over here. But that's not good enough, because we need to look at a smaller time frame. And what do we see? We see another spinning top at the very top. So all these is indicating a bearish momentum on its way. All right. So, but I believe since this has a bigger structure, you need to expect the market to do a bigger M formation. And basically this is what we are projecting the market to do. Okay, but on a 1-hour time frame, it is validated that this currency will be dropping soon till the 200 EMA, most likely, or maybe to this point. But you might expect a retracement back to the zone to create a much more bigger pattern. But if you're entering on a sell over here, have a very tight stop loss and aim for a quick let's see, about 200 pips. So that's about 200 pip drop. Okay, if it drops till here, from that point to this point. So that's a 200 pip move and then followed by another 200 pip rise, and then a continuation to the lower lows. Okay, so the overall trend is basically, the trend is changing. As you can see on a 4-hour time frame, there's no divergence, right? There's no divergence has been created. You need to wait on a bigger time frame, but at the same time take advantage of the smaller time frame. So we might expect a smaller retracement. Okay, maybe a level 1 and then push to the higher and then drop it down again. Okay, much more bigger pattern, and that's gonna validate every single thing. Okay, this is it, guys. So until then, I'll catch you guys next time.